So as Romain mentioned earlier, today is Merger Monday. $35 billion of deals announced across different sectors, including one that Wells advised on. Quikrete buying Summit Materials for $11.5 billion. Last week, Wells advised on Berry buying Amcor. To what extent are these deals emblematic of what we might expect to see in the months ahead?
So, Scarlett, it's a great question. And I think in your opening, you covered a number of the factors, quite frankly, that I think are going to drive M&A activity both today and going forward into 2025. And it really amounts to the factors that create confidence for CEOs. And there's really four key ones here. The first is the underlying economic environment. It feels increasingly comfortable to folks that we've had a soft landing. There's an expectation that we will have a positive GDP for 2025 and going forward. The second is the robust support in the capital markets. The debt markets, which we can talk about in a little bit more detail, are wide open. We've actually had a number of those capital markets with record issuance in 2024, and credit spreads are at or near, for many of these categories, multi-year tights. The third piece is the stock market. You've got sellers in the public markets where their stock prices actually performed really well. And in particular, the small and mid-cap names in the Russell, Romain, that you talked about, those comprise a lot of sellers in the market. And when you're selling at or near your 52-week high, it's a much easier discussion in the boardroom. And then finally, the buyers, with that their own stock prices at strong performance and this access to capital, that makes for a very potent M&A combination. Yeah,
that's quite the cocktail. So I mentioned that you joined Wells Fargo in February with this mandate to focus on expanding the investment bank operations. There's a lot of excitement about M&A and IPOs picking up. How does this influence your plans when it comes to hiring for this build out of the investment bank?
Yeah, so Scarlett, actually, you also mentioned, in the last 2 weeks, Wells has announced two $10 billion plus transactions, one advising on the sell side, which was Berry, one advising on the buy side, Quikrete today. Those are, I think, representative of some of the investments that Wells has already made. So over the course of the last 24 months, we've already hired over 60 managing directors across our M&A business, our equity and debt capital markets, and our coverage businesses. And as you know, when bankers join, it takes them time to understand the systems of our big institution and to re-cement those relationships with their clients. We expect to continue to invest over the course of 2025 in more coverage efforts. And you're just beginning, I think, in the last 2 weeks to see the benefits of those investments we've made. And I think our expectation is we need to be ready as a firm to take advantage of what our clients are going to need, which is advice and capital to do deals in 2025.
So is the desire, though, to do these bigger deals like we're seeing with Quikrete, the billion-dollar deals, or more into the middle market areas that has really been kind of the sweet spot for Wells for a while?
Yeah, so Romain, it's actually, it's a great question. You want to do both in order to be a leading franchise. And one of the things that's really attractive, that attracted me to Wells, is Wells has a deep, strong relationship base with companies across the middle market. Through the commercial bank and through the wholesale, their corporate investment bank, the larger companies. And in order to have, over time, a world-class both M&A and capital markets practice, you need to do both. You need to have a strong presence in the middle market, mostly to sell companies, and you need a strong presence in the larger cap, hopefully to advise on buying and on financing.
Why don't you think we saw that before? Because there has been criticism that Wells didn't have a big presence, at least in the top end of the market. But there was also criticism that with the middle market companies, that they weren't, that as those companies grew into bigger companies, that they would then leave for, JP Morgan or one of the other bigger banks.
Yeah, well, again, I'm 8 months into the job and couldn't be happier. The company itself, right? Charlie Scharf came in 5 years ago, has built a whole new management team. We've, as I mentioned, added significant talent across the bank, and I think really.
Are you having trouble getting that talent specifically for those roles?
No, we're not actually.
Okay.
I think it's, and in part because when people from the outside look at the platform, we have this very long-standing, deep and wide relationship base with small, mid, and large cap companies, and what we're adding is that capability and expertise to execute for them, not only in their commercial banking product needs, but across the entire spectrum of investment banking. And so I think, Romaine, you're just beginning to see what has been a relatively recent investment start to pay off, and but it will take, relationship building, investment banking capabilities. Those products take time, and we are absolutely committed to take the time and make the investments necessary to be successful.
What are your thoughts on the overall hiring environment right now for those senior bankers? How does it look to you?
It's a good time to be a very high quality banker because I think there's a scarcity of those individuals in the marketplace. The good news is we think our franchise and the platform and the opportunity set for people who are looking over the next 5 to 10 to 20 years and really want to have an impact on the business that they help bring in. I think we're a great platform. And as I said, we've already attracted a very large number of senior professionals.
So I'm glad that Romaine touched on the middle market relationships you have with middle market clients. Other firms with large commercial banks like Bank of America or JP Morgan are trying to tap those kinds of businesses for fees as well. It's very lucrative, obviously, and Goldman Sachs has also been pretty aggressive. Is this because it's just a really big opportunity, Doug, or is this a reflection of how competitive it's become, or even hyper competitive?
So, Scarlett, there are really only 3 banks in the U.S. that have a sort of a national commercial bank footprint, and you mentioned 2 of them. Wells is the 3rd. Those relationships go back for many of these companies. We provided them their first loan, so they are long and they're deep. That part of the market is an incredibly important part of the wallet share for all of the corporate finance products. So if you want to be a leading player, you have to compete in that segment of the market. And for us, it's a place we've had long-standing relationships, and we're now beginning to bring to those relationships that world-class execution capability. So every part of the market, large and small, is competitive, but we think we have some unique relationship capabilities and advantages that hopefully will allow us to move quickly in that arena.
Doug, I have to ask you about what's going on in Washington, particularly with the new administration coming in. What's your relationship like right now with folks in Washington? And B, do you think there's going to be a material change in the approach that regulators have taken, not just with the banking sector overall, but specifically with Wells Fargo?
Yeah, so as I talked about the M&A marketplace, I would say the underlying backdrop for fundamentals are really strong. You now add to that what the market believes to be 2 things reflected in the new administration. One is the fact that there's going to be a decrease in the regulatory burden, both for industries on the whole and as it relates to the FTC. Right? And so that removes, quite frankly, a significant concern and impediment for a number of CEOs that have deferred their action. The second thing is that the market clearly believes that this will be a pro-growth agenda on balance, again, giving confidence to CEOs. So when you look at both the market trading levels today, as well as the underlying growth in M&A transactions and the growing backlog, I think that reflects a reasonably high degree of confidence that this administration is going to be supportive of that activity.
Do you have a high degree of confidence that Wells Fargo is going to be able to grow with that? I.e., is that asset cap going to still be there? Because you're talking about a lot of opportunities, but as I'm sure you know, there is a constraint to just how much you can take advantage of those right now.
I would leave, we have a lot of public statements on that. I'm going to leave the specifics of those comments to Charlie and Mike. What I would say is that since I've been at the company, in every decision that we make, we place the importance of prudence and responsible decision making at the very heart of how we address the needs of our clients. And so I'm confident that we're going to be able to prosper in the environment going forward.
So, Doug, we started with M&A. I kind of want to go back to M&A, come full circle. Obviously, that feeds into other things like debt financing, like equity financing as well. To what extent do you plan to use M&A as an in to those other fee-generating businesses? Yeah,
so, Scarlett, the M&A business in many ways drives some of the most important and, quite frankly, most profitable parts of the capital markets business. So, today, for example, we announced a buy-side transaction where we are helping that company to do the financing, as you've reported. And that's a really important part of what we believe we bring as capabilities, whether that's debt or equity financing, to our partners. And as one of the country's largest banks, we have a significant amount of capacity to help facilitate those transactions. On the equity side, both as a financing matter for our customers, as well as an alternative exit for parties who are thinking about monetizing their investment, the opening up of the equity capital markets, there's been an increase in IPO volume this year of almost 50% over last year. We're still below 10-year trends. But again, we think the opportunity set for our customers, particularly in the commercial bank, to tap those markets is going to be a significant factor into 2025.